So the Bank of England are keeping interest rates on hold at 5%. What does it mean for us guys as property investors and developers? In this video, I'll give you my opinions. Now, we're certainly in strange times. The Bank of England have a remit to monitor inflation, UK inflation, and adjust interest rates accordingly. Now, their target rate for inflation is 2%. Inflation is currently at 2.2%, but Bank of England are expecting it to nudge up a bit, which is why they've decided to leave interest rates on hold for now. But they have said later on in the year they may bring it down a little bit. But this is all a bit worrying, really, because we are now out of sync with the other major banks. So this is the thing, really. Whatever we do in the UK, we think it's all independent, but we can't go out of sync too much with what the Fed is doing. Now, the Fed has just done the mother of all interest rate cuts. They have actually lopped 0.5% off their base rate over in the US of A. Now, in America, things are slightly different to over here. When they set interest rates here, they set it at a specific rate, like it's 5%. In America, they do a range. So they say to banks, look, the rate is between 4.75 and 5%. But the thing is, it's down by 0.5%, and they're predicting, or they're saying, indicating that they're going to lop another 0.5% off by the end of the year. The reason why they're doing that in America is because they're very worried about recession. A lot of the economic data, particularly the jobs data, is looking towards a recession in America, and they're trying to do this to stave off the recession. What worries me about what they've done in the UK is that all they've done is looked at inflation here in the UK, and that's it. So inflation is 2.2, it's set to tick up a little bit, and that's given them a little bit of spook, and they've decided to keep it on hold. Meanwhile, ECB, Fed is down dramatically. So what does that mean? The thing is, if US is heading for a recession and they're doing something about it, then 9 times out of 10, we tend to follow behind. That's just always what's happened. And particularly as economic growth in the UK is pretty much stagnant, and in the October budget, Labour's first budget, they're looking at significant tax rises. You can't tax your way through to growth and economic prosperity as a nation. So with all that going on, I'm a little bit worried about recession in the UK, but the Bank of England did say also that they are seeing future direction of rates as being down. So what does all this mean? Interest rates are the same, no change to your borrowing costs. I think that the buy-to-let mortgage market, particularly for long-term fixed rates, is still factoring in that there will be reductions at some point during the course of this year. That's likely to happen, although it didn't happen this time. That's likely to happen because otherwise, basically, we will be in a massive recession, and the global economy, or our UK system, doesn't really work if we are too out of sync with the US in particular. Now, a lot of economists criticise the Bank of England for not raising interest rates fast enough. The Fed were far faster to do that than the UK, and that has caused us a little bit of problems. My fear now is, of course, that they are being a little bit slow in reducing it. But what does this mean for you guys as property investors? Well, the thing is, as property investors, is that we as a country don't have any choice but to mirror the US of A. They have indicated quite firmly 0.5% now and 0.5% later on in the year. So interest rates are going down. That means that the mortgage markets are going to price that direction into their pricing for things like 2-year, 3-year, 5-year fixed rates. So I think that the mortgage markets are pretty much going to price in the fact that the UK will follow suit at some point, so there'll be some good mortgage rates to be had. And availability of good mortgage rates, of course, is good for the property market in general. But I think we're okay for now. But when the Bank of England meets next time, if they don't cut interest rates at that point in time, then I think we are possibly due for some very interesting times indeed. So what do you guys think? Do you think they should have cut these rates now, or do you think it's okay, they're sensible to have this inflation target that they stick to no matter what? Let me know in the comments below. We'll be giving you more updates on this channel. Make sure you subscribe and follow for more videos like this. The Baker Street Property Meet is the UK's largest and #1 property investors networking event. The property market is going through monumental change right now, and at Baker Street Property Meet we aim to keep you up to date with the latest tips and tricks and insider tactics to help you keep on top of your property investing game and succeed in these troubled economic times. The Baker Street Property Meet is fundamentally about networking, because it's not what you know, it's who you know. And at Baker Street we aim to connect you with the people to make your property journey a monumental success. There's no better place to be to further your property investment journey than the Baker Street Property Meet. So make sure you're here, you're connecting with myself and Andrew Roberts, our expert guest speakers, and 300 passionate property people each and every month. See you at the next meet. Get your spot at bakerstreetpropertymeet.com.